Hello, in this video I'll be sharing with you the shark fin trading strategy using the TDI. This is going to be a combination of the smart money concept of trading and the TDI as an additional advantage into our trading system. And the part of the TDI I'll be focusing on is the shark fin strategy. So I'll be showing you exactly how you can do your analysis as a smart money trader, how you can identify your point of interest, and then how the shark fin pattern of the TDI come into play in trading your market. And if you are yet to subscribe to this channel, what are you waiting for? This is the right time for you to do that. We have so many testimonies of people doing well using our strategy. And so that you can be part of this, click on the subscribe button on your screen, turn on your notification bell so you'll be the first to get notified. And please do not forget to give this video a like and share with your friends and your loved ones. So let me take you through the indicator setup. But the Bollinger Band, the period is 130, deviation is 2.0, the shift is 0, and this indicator is applied to close. Afterward, we have our relative strength index, which is the TDI. The period is 13, you apply to close, and you change this to your background color. So if you have done that, you move to the next indicator, which is our moving average. The period is 2, method is simple. Apply to previous indicator. To avoid confusion, please stick to the same color that I am using. Okay. Then we have the second moving average. The second moving average, the period is 7. And this is the setup. You do a screenshot of this. And then we have our Bollinger Band. Very much important. The period is 34. Deviation is 1.619. And then we have a moving average. This is period 34. The shift is 0 and the method is simple. So if you've done your setup correctly, your chart will be looking exactly like mine. So I'll be showing you how exactly you will use your Bollinger Band on your main chart, as well as everything on your indicator window. But before then, let's begin with our analysis. This is gold versus USD. So let's take our analysis from this point. Remember, all the market does is a repetition of pattern. There is nothing the price is doing in the market that is new. Everything is about repetition. So, our understanding of the previous market behavior will give us insight into what the future behavior will look like. So, let's continue. First, price has been in an uptrend, and I will show you how. Look at this carefully. Price has been giving us a higher low, a higher high, a higher low, a higher high, a higher low, we have another higher high, another higher low, and a higher high in that zone. So you can see that everything shared out beautifully. So this is higher high, this is a higher low, this is a higher high, this is a higher low, and this is a higher high. So if you are finding it difficult to identify your structural point due to the presence of wick, what is wick? Wick are those rejections you are seeing on your candles. You can change your candlesticks to the line chart. How do I do that? I tap on this, come out, I will click on this. So look at it, I'll click on this, and I will come here, click on this, and I'll click on my line type. Look at there, I'm going to change it to line chart. So if I go back to my chart now, you can see that what you are seeing now is a line. and this will make the structural point very clear for you without confusion. So if I tell you that this is a higher low, higher high, higher low, higher high, higher low, higher high, there is no way you are going to argue this. So this is clear, and this shows that we are in an uptrend. Now, another way of confirming our trend, if you are having difficulty in identifying structural points, the goal is to make trading simple and for everyone to trade. Okay, so you can use the middle Bollinger Band to determine your trend. And how do we do that? Once price is consistent above the middle Bollinger Band, we are in an uptrend. And when price is consistent below the middle Bollinger Band, we are in a downtrend. Please take note of the word consistent. It doesn't mean that price just run above and then return, you conclude that you are in an uptrend. No, it has to be consistent, stable above it. So let's continue. So if this is our higher high and this is our higher low, and we have a new higher high, so price return from here, which means that this structural point has been compromised. So here now we have a break of structure. So what that means is that we are now in a downtrend. Okay, so take note of that, that here we have a structural compromise. The structure was broken by the movement of price that come down here. It break this structural point. So we are now in a downtrend. So I am taking us back now to our normal candlestick chart. So now that we are in a downtrend, we have gotten this break of structure. What is the next thing we need to do? Remember, we need to mark our point of interest. Now, what is our point of interest? Our point of interest can be our order block. And if you don't know what is an order block, I will recommend that you watch previous videos again on this channel where we have discussed an order block. So a bearish order block is the last bullish candle before this movement that breaks structure. Okay, this is where the structure was broken. So there is this last bearish candle that initiates that movement that breaks structure. So that is the candle we are referring to as this order block. So here is their particular last bullish candle that initiate that move. So I'm going to mark that candle now as my order block. So here I've marked it. So that is my order block. Okay. Now I am still going to look at what I am marking point of interest is in this particular range. This range that break the structure. That is the range I am marking my point of interest on. Then the next thing I'm looking at, do I have a fair value gap? Is there an imbalance in this move? The answer is yes. If you look at this carefully, here there is a little fair value gap. And also here too, all the way to this point, there is a fair value gap. So what do? I will carefully mark that zone as my point of interest. So I have here fully marked out as my point of interest. So I have my point of interest being marked out, and I know where is my range. Okay. So now that I have done this, so I'm taking you through the process of trading. Okay. So now that I've done this, I can confirm, is this area my premium zone or my discount zone? So this is a downtrend. Is it a premium zone? Because I want my stop loss to be small. I don't want to be buying, I don't want to be selling at a very low zone. So I want to sell high and buy low. So look at this. The zone I marked is in a safe zone. Why? Because price, this zone that I've marked is between 61 all the way to 100. So that is a premium zone. So that has been taken note of. So we are good on that. Now, what is the next thing? I will now be waiting for price to pull back into this point of interest that I have marked. So when price begin to pull back into this point of interest, I am already celebrating because I know that price pullback here is now opportunity for me to make my entry. What entry? Is a sell entry, right? So this sell entry we are talking about, now price has pulled back into my point of interest. The question is, will I just jump into trade and begin to sell? The answer is no. Price has come into my point of interest. Here is the price in my point of interest. What do I need to do? I will need additional trade confirmation in order for me to make my sell entry. Now, what do I need? One, I can use a divergence and a candlestick pattern. So on this 1 hour, if I want to make entry based on a 1 hour, I will be using a divergence. Now look at this. You already need to have mastered this in order for you to identify this. Price is giving us here is making higher highs, you can see. But if you look at our price line, the TDI price line is this green moving average you are seeing. That is the price line. So if you look at this price line carefully, you realize that the price line is going towards the downside. You can see that. Perfect. So this divergence confirm that we have come to the end of this pullback. That is what it means. It means we have come to the end of this pullback. Okay? That is exactly what it means. We have come to the end of this pullback, and there is a tendency now for price to push forward. So that is exactly what that means. And now that we have this divergence and then we have this candlestick pattern, you can see that hammer we are having inside there. So you will now go in with your sell. So which means you will sell here. After the close of this candle, you sell. Now your stop loss is at this high, above, a little bit above the 100. Yeah. So this is your stop loss. The question is why? Because if price peradventure break out of this zone, if price peradventure break out of this zone and closes above the 100 level, it simply means that the structure continue back to the upside. Okay, but in this scenario it plays out. So the standard place for you to put your stop loss is above your lower high for a downtrend. Okay, so now we have our stop loss, and then your take profit will always be below the 0 point, which is below your lower low. Why? Because we are expecting this price, since it's a downtrend, to take the liquidity of the lower low in order to create a new lower low for us. So price need to take the liquidity of the lower low and then give us a new structural point, which is a new lower low. And that is exactly what happened here. So you can see how that just played out beautifully well, right? So now, another confirmation is this. When you have this candle close, pay attention to the signal line. What is the signal line? The red line of the TDI is your signal line. So you need to wait for your signal line and the price line to cross each other, and when that happens and that candle close, you are into that trade. Now let's look at 15 minutes where we are going to get our shark fin pattern. So now look at this. Remember, the strategy is tagged the shark fin trading pattern. Now here, for your entry, if you don't get the fact that we don't get the shark fin on a 1 hour, we can still make entry on a 15 minutes. So you confirm it there, and then here is our shark fin. Look at this. You know a shark. So in this term, we are treating the lower Bollinger Band and the upper Bollinger Band, which is the blue line you are seeing, as our water. So the same way fish cannot survive or exist outside the water, it is assumed that price too will not survive or is not expected to stay outside of the Bollinger Band. So inside of this Bollinger Band of the TDI is being seen as water. So this price line now is being represented as our shark, which is our fin. So it is expected that the shark remain in the water for survival. More also, price is expected to remain inside of this TDI Bollinger Band for survival. So anytime price go out of it, we call it a shark, because when a shark stays in the body of water for some time, you realize that the shark will dive outside the water for a while and then return back inside the water. So it is this curving of the shark returning back inside the water, okay, that we now call it the shark fin trading pattern. So that is exactly what this shark fin represents, and that is what it connotes. That is what it means. So you will now look that when price is approaching your point of interest, either on your lower time frame or on your 1 hour, you will now observe, is there a shark fin? Is your price line outside the upper Bollinger Band or the lower Bollinger Band? If your price line is actually outside the upper Bollinger Band, it means that there is a high tendency of it returning back inside, because it's not permitted to be so, right? The same way it is not permitted for the shark to stay outside of the water. So it will return inside. And that is why when you now get this divergence, even on this 50-minute too, we have the same divergence. So when we now get this divergence, it becomes a double confirmation. And then you can see us inside this trade. And this would have been a very beautiful entry for you. So I'll be stopping here for now because I don't want this video to be too long. In the subsequent video, I'm still going to continue the part 2 of this video. And I believe you have learned something new. What are you waiting for? Why not hit the subscribe button, turn on your notification bell, so you don't miss the most important part of the Shark Fin TDI that I'll be sharing in the subsequent video. And please do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified. And so please as well, there's a description in the link of this video that can lead you to our Telegram group where you can ask questions. You can as well ask questions in the comment section of this video, and as well reach out to me one-on-one on the Telegram group. You can also enroll for our mentorship class at a very little fee. Thank you for watching, and see you in the subsequent video.